Friday, the 15th of August, 2025. Hope you're all doing well and having a great time wherever you are. We'll talk a little bit about the markets right now. Bitcoin, alts, or AI. Which of them is going to have a boom or a doom? Go up? Are they all going to come down? Are just some of them going to go up and some of them going to go down? The answer, as always, lies in the actual intraday charts. If you want to look at the long-term perspective, it's kind of simple, and that's not the intraday charts today. So if you're talking about trading it, then you got to look at the intraday charts, and you got to look at the volatility, entropy, probabilities, and statistics, which are the thing that dominate how the markets move, and they determine how the markets move, in which direction, etc. If you want to look at the longer term, bigger perspective, bigger picture, it's very simple. Bitcoin and alts and AI are all headed to the upside with a very high degree of probability. In much the same way that you could tell in the early 1990s that email and the web were going to be massively important. So any project involving those things had a significant probability of some measure of success. Whether they ended up being long-term measures of success or not is a different story. But over the arc of time, at least for the first several years, at least until the dot-com bubble, quote-unquote, dot-com bubble collapsed, shortly after around 2000 or so, 2001. It was very obvious that at least in the mid-90s and late 90s, that anybody sticking a .com on their business name could make a lot of money, whether you offered any actual services or not. You could just have a website. I don't remember if you know this, but there was literally a website called GeoCities, if you remember that. I think it still exists, in fact. And GeoCities was basically a website that let other people easily build websites on it. Okay. And there's just a couple of kids who set the thing up. It was a pretty primitive interface, and they sold their company for many millions of dollars. I remember how much. It was a ridiculously high amount of money for literally building a website that had just a bunch of garbage on it. And they made out like bandits. Congrats to them. And there were many sites like this, right? There's obviously the Pets one, the famous Pets, site that, seemed like it was, wow, amazing. Pets, .com or whatever is going to be the next way to get your pet food and all that stuff. Until it, they ran an NFL, or they ran an ad during the Super Bowl. And after that, it's just, they went downhill and disappeared not long after that. And then, of course, now you have Chewy, right? Which is similar concept, but in a different time. So just like Pets.com was a great idea, poorly executed in terms of efficiencies that could not scale. Now Chewy figured out, oh, those are the problems with that. You're the only one here. No, apparently you're not. Hello to all of you. What is this message? Somebody putting really nasty comments in it. Ignore that. So Chewy figured out the inefficiencies of Pets.com, and when they built their business model, apparently they have ironed out a lot of the problems that existed on Pets.com, and now they are a much more successful venture in theory, and appear to be a more successful venture and probably have a longer term positive growth outlook for now, right? That's because of all of the economies of scale and efficiencies of the marketplace that have taken over since the initial .com bubble popped and then Web 2 came around. Now, when the time of obviously Web 3 with all the crypto and NFT and everything else that's coming, through the whole blockchain world. But still, you have Web 2 companies, like Chewy or whatever, they're selling stuff online, and Amazon and all those huge companies selling their stuff online. Um, and it's really no different than what we see now, right? With the advent of the crypto and also with AI, right? With crypto and with AI, we've kind of already gone through what the first version of the web was like, right? In the 16 years that crypto's been around, as as a currency, as a viable, scalable currency with Bitcoin, right? We've already seen many millions of coins come and go, literally, right? And there are now many, many millions of cryptocurrencies, as was predicted by yours truly and many other people who were just observers of the market, saying, okay, well, if anyone can create a coin at the push of a button, expect millions of them in the not too distant future. And this was, 5-10 years ago we were saying this, and lo and behold, we're at millions of coins, millions of different cryptos and projects and whatever in the space. Of course, not all of them are going to be a success. Of course, the vast overwhelming majority of them will fail in time, right? That's called consolidation in a marketplace. And consolidation happens when projects fail, and consolidation happens when projects merge, and consolidation happens when projects get acquired and then usually shut down. That's also very normal. Like competitors will buy out competitors just to shut them down and maybe take their client list, maybe not. These things happen all the time in every industry. So on the broad arc of time, you don't have to be a genius to understand that AI projects are going to do very well, right? Including those that already have, but also those that are yet to have their day in the highlighted spotlight. And likewise, we're similarly going to see continued positive returns, very probably, for Bitcoin and altcoins. And I know you're going to tell me, but Yasha, yesterday, Bitcoin and altcoins dumped pretty hard. Yeah, they did. So what? It wasn't even that hard. There's a few percent on Bitcoin. And okay, yeah, some coins dumped 10, 15, 20% or more on altcoins, right? But some of them are already bouncing back up again, even if there'll be more downside today. There could be more upside back on the weekend. You got to look at these things intraday. But in the big arc of time, consider that yesterday, literally right before the dump, Bitcoin was at an all-time high. Right? It breached 124,000 for the first time, right? And then plummeted. Should you be surprised by that? No. The expression sell the high, buy the lows, sell the high. Well, yesterday was clearly a sell the high moment. And Bitcoin was at a high. So it is no surprise that it dipped. And you can historically look at every time Bitcoin actually gets to a new all-time high. There is consistently, almost like clockwork, some kind of pullback that happens. Sometimes it's the beginning of a prolonged selling period, which people will call a bear market, but it's just a prolonged period of sell pressure more than buy pressure, right? That happened in 2017 to the end of 2018, right? From literally it was 1 year. It was December 17th, I think, 2017, until December 17th or 18th, 2018, literally a year, to the day, that the market was basically going down, and then it popped back up and started climbing again. And that has happened a lot in the 16 years that Bitcoin has existed, right? Many times, more than once, obviously, more than twice, I think more than 3 times even, which is a lot when you consider that. How often does it go to an all-time high? And yes, when it's running up during all-time high days, sure, you can have many days of having all-time highs again and again and again, as we saw in November, December, right, in early January of this past year, right? When it was like at 60 something thousand and went all the way up to 100 grand or whatever. And we saw that happen to no surprise, right? Why do I say to no surprise? Well, because when you look at the volatility of those periods of time, right, and the entropy of those periods of time, it was only natural for those things to happen with the returns and for the price action to follow. But on the bigger picture, right, if you pull out and look at just the bigger picture, you can see that every time there are significant new highs, or we just break through the past level of the high after an extended period of time of not being there, like the last month and a half or whatever, or a few weeks or whatever it was since the last high, that you're going to have naturally a little bit of a pullback. And people will say, well, it was clearly that it was the CME gap or whatever. No, there are plenty of gaps that don't get filled. Okay. And even those that do over time, right, they're not the reason that the asset pulled back. The reason the assets pull back is the volatility, the entropy, the probabilities, the statistics. Right? There's sell pressure building and is driving the volatility to the downside and is driving the entropy to the downside. Right? That's what's happening. So, big picture, is it wise right now to get in on the so-called bull run? Well, they say buy the dips, right? You know that old expression, buy the dips, but meaning buy low, sell high. Well, if you had a major pullback on any of your favorite assets and you see that the intraday is telling you this is a good opportunity to allocate a little bit more funds here, given that there's still a risk that it may fall further, do your maths, calculate your risk, see what you can actually put in there, see if it's something that fits your risk appetite, see if it's something you want to do, right? And if it is, well, God bless you, go for it. If it's not, God bless you, don't go for it. Either way, be happy with your decision. Whatever you decide to do, that is what you've decided to do. Even if you choose not to decide, you still have made a choice, as Rush sang, right? Which is, of course, a derivative of other lines from other authors. And the point being, right, very clearly, that the market is, of course, prone to risk, especially volatile markets. It doesn't matter if we're talking about Bitcoin or altcoins or AI projects, right? They are all prone to risk. They're all, potentially going to fail. But that doesn't mean that you should avoid them completely, necessarily. If you think that there is a future in any of these technologies, which have so far demonstrated that they are quite popular, right? And you can say, well, what are you talking about? Crypto's not popular at all. There's only a few 100 million people who use any of it. Maybe, but that's a few 100 million people in 16 years. And during that time, it has been reviled, it has been rebuked, it has been lambasted, or lambasted, however you want to say it, by every single institution and authority, even as they were acquiring as much of it as they could. Even to this day, there are central authorities that say, oh no, this stuff is for gangsters only and criminals only, even as they're buying more and more of it. Why would they do that? Well, if you know that a new source of wealth is being created and you have the opportunity to gather up as much of it as you can at the lowest possible prices, especially if you keep scaring away the Joe Q. Public, right? Or you might have to pay a lot more for it if Joe Q. Public is aware and starts buying it for himself. What would you do? Right? It's like the Hudsucker Proxy, right? If you ever saw that movie with Tim Robbins and Jennifer Jason Leigh and Paul Newman, Charles Durning. If you ever saw that movie from the 1990s, it's all about how this company finds itself in a position where the founder is no longer around, and the board that controls the company suddenly finds itself scared because he doesn't have any heirs to his fortune. So their bylaws say that at the end of the year, Joe Q. Public is able to buy, stocks, and the board doesn't want them to own the massive amounts of stocks that he owned, that the founder owned, because he owned like the vast majority of the stocks, like 80-something% of the stocks, of the shares of the stocks, and the price is relatively high when he goes, when he goes out at a high. So that means that if the board wants to own the majority of the company, they would need to either pay a lot of money, right, at the current high price, or collapse the price, and then buy it at a low, right? And so as part of their scheme, they're gonna, hire some fool, at least they think it's a fool, to come and be in charge, apparently, as the new president without any apparent qualifications, in order to scare the public and make them dump any interest and crash the price, like the existing investors on the market, right? So have them dump the price, and then when the prices are low, the board would buy back all their shares and buy back all the shares that the founder left behind, and they would run the company and then drive back the prices back to the upside. And of course, it's a comedy, so it doesn't exactly work out that way. But the point is the same, right? If a major company or major financial institution or central authority of any kind, like a government or federal bank or whatever, Federal Reserve Bank or central bank, can see that there's wealth being created by this new thing called crypto, right? Well, the easiest way to gather up as much of it as possible is to do exactly what they've been doing, which is to basically FUD the market, right? To spread fear, uncertainty, and doubt. FUD, right? To spread the FUD as much as possible, to get people scared of crypto, to get them away from crypto, keep them from having anything to do with it, convince them that it's only for gangsters or criminals, when obviously that's just not true, and obviously fiat currency has been used infinitely more than crypto will be used for crime, because crypto is all in public ledgers. At least any legitimate crypto has public ledgers, and even the ones that have privacy layers, they still have ledgers, and forensic analysis can demonstrate certain things, right? And other kinds of examinations can demonstrate certain things. So yes, even with anonymous coins, you can still track transactions. You may not be able to track who is who behind every transaction, but with other forensic evidence, you can, right? And there are forensic experts who are good at this, who are able to do it. And most people in crypto have no idea what they're doing, so it's really easy to track even their, supposedly anonymous transactions, because they do really basic, stupid things. Like, for example, they'll acquire some amount of a supposedly anonymous or private coin through a network that they've already done their full KYC on. Well, if they want it to be anonymous, and I say it's stupid only because it's like, well, if they want to be anonymous, then it's stupid. But if they're just following the law and buying, Monero on whatever big exchange that lets you buy Monero, they don't necessarily care about being anonymous. Yes, they might have a privacy feature, but they don't necessarily care about that. They just want to hold some because they think the value will go up over time or whatever, right? So, people buying privacy coins on non-private networks obviously are not don't really seem to care, and especially if they keep their money there and they hold it there instead of transferring it to an anonymous wallet that they control, right? And even then, right, to send the entire amount to one wallet is very obvious, and all that kind of stuff. So there's different ways people track who's using privacy coins and whatever, even without having to necessarily have the names of the people on the specific wallets. But the point is, right, we've seen the traditional markets and institutions and authorities still to this day, even as they're buying more and more of it, we're seeing plenty of central figures continue to slam crypto and call it garbage and criminal and all this nonsense. All they're doing is literally exploiting the stupidity or the naivete or the ignorance of the public that just doesn't know any better through no fault of their own. And how could they know any better if they don't have the time to learn about it and all they ever hear about is negative? If all you ever heard about a topic was negative, how much would you really dig into it? And if you're the kind of person who's like, oh, technology's not for me, and you like say all this nonsense, no, I don't get technology. I'm not a nerd or I'm not a geek. Okay, you use a smartphone, you're a freaking geek. Deal with it, right? 40 years ago, if you held a smartphone in your hand, if you travel back in time and hold a smartphone in your hand that would somehow work, right? You would be considered a geek or a nerd, right? Well, today everyone's using smartphones. Not everyone's considered geeks or nerds, but everyone is in some way geeked out or nerded out. Right? If you're making just phone calls on your smartphone, that means you're pushing icons, you're sliding on touch screens, you're using technology in a very engaging way. Whether you know it or not, you've been geeked out, you've been nerded out. So to pretend that you're not is honestly, it's more than just getting old. It's so passe, it's not even funny. Like, you really should just stop that. It's pathetic, right? The best thing for you to do is to accept that you're a bit of a nerd, a bit of a geek, or both, or completely. And these are not the same thing, but that's okay. You can look up the difference, small as it may be on the surface, and accept the fact that, you do actually engage with technology far more than you appreciate. And it's not that complicated to learn about yet another new subject, right? You had to learn about how to use email and the web on your phone, right? It didn't just naturally occur to you. Somebody had to give you a phone, somebody had to show, or you had to buy a phone. You had to learn how to operate it, right? How to turn it on, how to turn on the screen, how to slide, the screen open, how to, enter an application, how to, go to the web application, how to surf around different pages. You had to learn all these things. They didn't just naturally occur. So the same holds true with this new tech. That's going to do it for now. We're both doing well. Remember, long term, things are looking up. Peace.